Hello traders, welcome back to the channel. In today's episode, I'm going to be breaking down market structure like never before, all right? So make sure you watch the entire video so that you can understand exactly what I'm trying to teach you here. Right, without wasting your time, let's get into it. All right, here we are. Okay, let's say this. Okay, a lot of you guys been asking me this question. A lot of traders who are coming to the channel are newbies, so they're having a hard time understanding the market structure. So basically, let me show you guys how it looks like, okay? So first thing first, okay? Let's just create this in high uptrend market. So in an uptrend market, price creates high highs, high lows, okay? So here we have an uptrend market. So we have low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right. So anytime the price creates a high high and breaks the previous structure highs, we call this a break of a structure. Okay, so I have my templates saved, so I call it BOS. BOS stands for break of a structure. So now we have another higher high here. We have another higher low, created higher high, breaking the previous structure highs. Okay, so now we have another break of a structure. So anytime the price breaks the previous highs and creates a higher highs, okay, we mark it as a break of a structure. Again, here we have another break of structure. All right. So this is low low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So if you look at the highs, each high is getting higher than the previous highs. Okay, each higher low is getting higher than the previous highs. So this tells you that you are in an uptrend market. And when you look at all the previous higher highs are kind of like connecting, okay? So this higher high is higher than the previous high, and then this higher high is higher than the previous high, and then this higher high is higher than the previous high. So here we have a price creating higher highs, higher lows. So anytime you see this in a higher time frame, like the 4-hour time frame, this means you are in an uptrend market. So you should only be looking for a buy position whenever the price creates a higher low and comes back to somewhere like a demand zone or an order block. You look for a buy position. Okay, all right. So this type of market, you look for an uptrend, you look for a buy position. So you never look for a sell unless you are scalping this pullback on the lower time frame. So anytime you go to the lower time frame, this pullback here will look like it's creating a basically internal lower highs, lower lows until it hits a demand zone and then creates a change of character and then continues to the upside. Okay, until then you just have to look for a buy position in an overall market. All right, so the second market that we're going to be looking at is let me see, sorry, give me 1 second. The second thing that we're going to be looking for is a downtrend market. So here, let's see the price here creating lower highs, lower lows. And the reason why I'm creating this video is because there are a lot of new traders who are coming to the market and then they don't know what the break of a structure is, what is change of character, what is market structure, what is higher highs, higher lows. So we also have to benefit them in order for them to start learning too. So here in this market, we can see that price is creating higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So anytime the price creates a lower high and then lower low, breaking the previous structure low, we call this a break of a structure, same as we did in the uptrend market. So this is called the break of a structure. So we call it BOS, all right? And then we have a lower high led to lower low breaking the structure. So this is lower high, lower low. So this is BOS. And now we have another BOS here. And then BOS stands for break of structure, simply, okay? This is how we mark the markets when we're using the SMC strategies. So now we have another higher high, lower high led to lower low, breaking the previous structure. So we call this BOS. Again, we have another BOS here. So we have lower high led to lower low, breaking the previous structure lows. So now we have another BOS. All right. So if you look at the lower highs, each lower high is lower than the previous low. Okay. each lower high is lower than the previous low. It's like a ladder or steps that's going down. So when you see this type of market on the higher time frame, like the 4 hours, this means the price is basically trending downwards. And this is called a downtrend market, okay? Or downtrend market structure. In overall, generally, this is called market structure. So if you ever hear about market structure, this is what market structure is, okay? This is, the external, and anything that's the pullback here. So this pullbacks, when you go to the lower time frame and you look at the pullback here, it might look like an uptrend, okay? Let's say you are scalping on the 15-minute time frame and you check in the 1 hour time frame for the overall direction of the price. So when you go to the 1 hour time frame and you look at this, it basically looks like an uptrend market, okay? And then the price hits somewhere, a supply zone here, and then reverses with the overall direction of the price. And then the price stops over here, and then now we have another pullback. So the 1 hour looks like downtrend. And then when you go to the 15-minute time frame, if you're scalping, this is going to show like high highs, high lows, pretending like the price is going up. But you have to know, as long as you know where the 1 hour supply zone is, you can scalp this on the 15-minute time frame to the 5-minute or the 1 minute time frame. Okay, as long as you know what the 1 hour is doing. And then let's say again here, let's say this is, downtrend, right? As long as, let's say the price trended from here to here. So now you have a downtrend market structure. So what you do is you go ahead and mark the supply zone that created the breakover structure. So once you mark your supply zone, it could be somewhere here, and sometimes it could be somewhere here, okay? So what is a supply zone? Basically, when you are trading a market structure, uptrend or downtrend, when the market is going down, we look for a supply zone, and when the price is going up, we look for a demand zone, okay? Just like any other market, even in the currency market, there's always supply and demand. So what is supply and demand? When there are more sellers in the market, we call it there's more supply than demand. And when there are more buyers in the market, we call it there's more demand than supply. So basically, when there's less supply and high demand, the price goes up. And when there's too much supply but less demand, then that means the price is going to go down. So basically, there are buyers and sellers exchanging transactions. Okay? All right? So this is a downtrend market structure. Anytime you see this on the chart, you look for a sell position. Okay? And how do you look for a sell position? Anytime you get that break of structure. Okay? Anytime you get this break of structure, let's say you have this lower high led to lower low break in this structure. And now, let's say you want to resume with the higher time frame. So what you do is now you look for the supply zone that caused the break of this structure. So the supply zone that caused this move, that's what you're going to be looking for. So it could be somewhere here, okay? And sometimes it could be somewhere here on the extreme lower high. And then if the price does this, we call this a change of character. But how do we identify if this is a change of character? So change of character literally means the price went up, created too much demand, breaking the previous lower high, led to the lower low, or the previous supply, and now there is an imbalance. Okay, so basically when the price creates this type of impulse, it means now we have a change of character or we have a reversal. Basically now we are trending. Instead of the market going down, now the price is going up. Okay, here we have a trend line. You can see it, right? So now we have the price creating higher high instead of lower low. So now what you do is you go to the lower time frame and you wait for this pullback here, okay, to come back to a demand zone. So what that demand zone is, the demand zone that created the break of this structure. So that demand zone could be somewhere here, or it could be somewhere here. Okay. And the characteristic is that demand zone has to have some type of imbalance. Some call it order block. Some call it demand. You know, so it doesn't really matter what you call it. But for me, you can call it any name that you want it. So there's always, you know, contradiction when it comes to that. But I call it a demand zone, and sometimes I call it an order block. An order block simply means where a lot of orders are clustered. Like whenever the banks bless their orders, they always leave that order block protecting their stop loss. Okay, order block means just a place where the banks use to enter and then to put their stop loss right below the order block in order to protect their stop loss. So let's say this is an order block. Okay, let's say this is an order block. All right, so the banks enter and they put their stop loss here. So this is where they enter the market, and this is where they put their stop loss. All right, so this order block here protects their order. But if the price goes below the order block, then they look for a sell position. Okay, all right, simple as that. So now let me get back to the topic. All right, I don't want to deviate, so let me just continue with what I was showing you guys here. So now let's say the price created a higher high instead of a lower low, breaking this structure. So now we have a reversal or change of character. Now the price comes back to a demand zone somewhere here, the demand zone that caused the break of this structure here before this big impulse. Okay, so we look for that demand zone and then we continue buying to the upside, targeting previous highs. Okay, because there's always liquidity or stop losses that's sitting on every lower highs and every lower lows, every higher highs, every higher lows. There is always swing highs and swing lows. There is always stop loss that's sitting there. Why? Because some people sold from here, putting their stop loss right there. Some other people start selling from here, from this supply zone, and putting their stop loss here. Then some started selling from here, putting their stop loss over here. So there are a lot of swing traders who are putting their stop losses right above the swing highs here. So what's going to happen is now the price is going to attract to go take out their stop losses, okay, until it reaches an extreme what do you call a supply zone, and then reverse again. All right, that's how simple it is, guys. This is called market structure. When price breaks, you know, previous lows or previous highs, we call it break of a structure. When price reverses, breaking the previous lower highs or the previous higher lows, we call this a change of character or a reversal. All right, any swing high is called, you know, extreme supply, and then any swing low is called extreme demand. Okay, so you just have to know that. Very easy, very simple, nothing is very complicated. All right, so when you look at the markets, this is how you're going to be marking your prices. Okay, now let me show you guys a trade that I took today using this same scenario. All right, let me show you guys this here. So here we have GBP USD. All right, this is the pair that I usually trade. I sent out this to the Telegram group, which is a free Telegram, and the link is going to be in the description. Also, I have written an ebook that contains about 119 pages that will teach you how to trade properly when it comes to smart money trading. You can also find that link in the description. It is a very valuable ebook, contains a lot of high quality information. So make sure you check that out. Also, if you haven't subscribed, please make sure you subscribe to the channel. Without wasting time again, let me get back to the topic. So here I can see the price is going down, creating lower highs, lower lows. And now right here, I can see that on the 1 hour time frame, there is a change of character. So what is a change of character? A change of character simply means a reversal. All right. So once we get this change of character, I can see that there is an extreme demand somewhere here. This demand is already mitigated or already balanced, but there is an extreme demand around this shadow that's not touched yet. So if you look at this shadow here, this is an extreme demand, and this demand zone is not even mitigated yet. This trade is, I took it and I also posted it in the free Telegram group. You can go check it out. All right. So the price came all the way back, just created a lot of, created higher highs and then created a lot of liquidity. Everything that you can see over here is a discounted. Okay, I don't trade anything that's around here. So sometimes I use Fibonacci as a confluence. I don't use it, solely. I'm going to create a video explaining this, but sometimes I use the Fibonacci just to see the premium levels. Okay, just to see the premium levels. So when you look at here, I don't trade anything above the 50%. I don't take any trades. Okay, anything above the 50%, I don't trade it. And the reason why is because you can already see it. There's a lot of manipulation going on here. Okay, some people are just marking this support and resistance, selling from here, and now their stop loss is taken out. Okay, and now some are trying to sell from here, and now the stop loss is taken out. Some started selling from here, the stop loss is taken out. Some started buying from here, the stop loss is taken out. Some have started buying from here, and then the stop loss is taken out. So there's a lot of manipulation going on, anything above the 50%. So what I do is I mark the low and the high just to use it as a confluence, and I don't rely on the Fibonacci alone. So anybody that says that the golden zone, this and that, this and this on YouTube, don't believe them. You always have to use Fibonacci with your trading strategy. You cannot use solely just Fibonacci. All right. So here you can see that price give me that change of character, consolidated around here, and then come down all the way back to the unmitigated shadow or unmitigated demand, which is right here. And then I entered right there. And then if you go all the way down to the 3-minute time frame, you can see why I entered this market. The price came all the way down before it hits my entry, and then it took out this liquidity here. Why? Because people have started buying from here, thinking this is a change of character. They bought from here, and then once you get this change of character, they start buying from this demand zone again, because there's a demand zone sitting here, but their stop losses was sitting over here. Now the market created a high, and then crazy market came all the way back to mitigate the unmitigated demand zone, and then take out all the stop losses, and then reversed. Okay, so this trade, you can see it gave me around 5 to 9 risk reward ratio. It was about 67 pips, nice and smooth, and it was precise, and I called it out last night. You can go to the Telegram channel and check it out. Okay, I preach and I use what I preach. I don't just teach here, I also teach and trade what I show on YouTube, and also what I put on the ebook. So that ebook took me a lot of time, a long time to create it, and I've put a lot of knowledge. So if you buy that ebook and you're not making money, that means there's something wrong with you. Okay, I don't want to promise you anything, because it all depends how you act with your psychology and your mindset. But you might want to go ahead and check out that ebook. It probably will help you see the market differently. All right, I'm also working on a book that's going to be about psychology, and the mistakes that I've learned from trading, how I avoided, what I have done, all this good stuff. So it's going to be about 80 pages of psychology and how you can use that knowledge to become a better trader. And that book will be released pretty much soon. I'm also working on, mentorship, probably coming soon too. Again, please make sure you share this video with your friends who are also struggling. And I really appreciate those who are connected to the channel and been supporting me all this time. Without you guys, I wouldn't be where I'm at today. So thank you very much, guys. I really appreciate you guys. May God bless you. This is your brother Jamal again. Peace and love. Right? Ciao.